Here we go, guys. We're going to do a real quick reaction video to Gareth Soloway over at In the Money Stocks and his thesis on Bitcoin and its comparison to the Nasdaq. And if the Nasdaq pulls back, and if a little bit or substantially, what a big run on Bitcoin we would have to the downside. Okay. And let me give a real quick disclosure here, a little background information. At one time, I was a member way back in the day over at In the Money Stocks with Gareth Soloway and Nick Santiago, two great guys, two great traders. And that's kind of a side note on that. At that point in time, I was so desperate, I was taking, part-time jobs in order to pay for the membership and the courses because I didn't want to take it out of the family budget. And I'm saying all that to say this is that, if you're willing to do about anything to make it happen and make a, concerned effort to improve your education, you can be as good as anybody out there. Okay. There's no one on YouTube. There's no one on Twitter. There's no one on CNBC or whatever that you can't be as good or better doing the charts, doing the cycles, doing the price predictions, and pulling money out of the market. So anyway, let's get on with the video.
All right, this is my thesis for why I think Bitcoin's going to go down from here. Okay, and again, I understand no one wants to hear it. If you're a bull on Bitcoin, this is not what you want to hear. But to be honest, sometimes the truth hurts.
Okay, speaking of truth hurting, at one time, Gareth was on every media station you can think of in the world, touting, $12,000 Bitcoin, sub $12,000 Bitcoin, $10,000 Bitcoin. Yeah, that truth kind of stings.
And that's okay. Or in the very least, I want you guys to take this information and at least store it in your brains and then make a different decision. But look at both sides. What drives me nuts about Bitcoin and crypto kind of nut jobs out there, the super uber bullish people, is that they're not willing to look at both sides. All right. So again, when we were at 69,000 and I said, guys, charts are telling us we're going to 20. No, going to 100,000 by the end of November. How did that work out, right?
Yeah, how did that $10,000 Bitcoin price prediction work out too?
You didn't look at both sides. So one of the things I want to show you here, this is the chart of Bitcoin, okay? Bitcoin here, this is the weekly, which is where Bitcoin is. This is the chart of the Nasdaq. And I want to show you this.
Okay, I'm going to speed this up a
So
little
my
bit.
thesis for why
And,
Bitcoin can go lower is very
well, let
simple.
me let you
If the
do it.
Nasdaq corrects after doing a massive move up, how much will Bitcoin fall in response? Okay, well, let's do a quick trend line here. Let's do this right off the bat. So what we're going to do is we have to go up. The Nasdaq has to basically go up, 7%, 7% or so.
So he's comparing, Bitcoin as a huge, it has to make a huge move to the upside, to hit its recent high, and the Nasdaq, is a little bit more shallow.
Get back to the highs. So look at the difference here. This is what rally you've gotten in Bitcoin, and this is what rally you've gotten in the Nasdaq. Now let's just do a hypothetical. Let's talk about what if the Nasdaq just corrects back to 12,000 from 14.3, which would be a retrace of this move of around 50%, maybe 618 Fibonacci retrace.
Okay,
Where do you
let's take
think
a quick
Bitcoin
look at
goes?
that right here. Well, first of all, let me show you the daily chart on Bitcoin here, just uh, kind of funny. Let me take the 50. Oh, let me put the 100 in there. As you see, we came down, tapped that 100 as a flat 100 simple day moving average. And when a moving average is flat, plus you have an additional factor, which our Patreon members know about. So basically, you have two factors that gives you an 83 to 87% probability odds that your thesis is going to come true, and that is we were predicting a bounce off of this zone with that other factor, but I can't, show that to you because they're paid members. So anyway, I wanted to show that to you real quick. We'll go to the weekly Bitcoin, and then here is the Nasdaq weekly chart here. And in order to understand what I'm going to, my thesis on what's going on, I'll have to give you a little chart school here. Number one, here was the COVID slam down, and markets reverse or break down three different ways. You have a V-shaped, recovery, or a W shaped recovery, where you make a high, a low, higher high and take that previous high out. And then the last one, if you look back at Bitcoin after the FTX debacle, we went down and then we traded sideways for quite a bit of time, got away, far and away from that, traumatic, injury over here. And then as people soon forgot about it, we came back up. So kind of making light of that, but that's basically the three ways markets, break to the upside or break down. And then as you see here, it's been a little while. We're getting far and away from the 20. And as you see, we keep these charts very clean. The two most important moving averages on your chart is the 20 and the 200, but that's another video for another time. But anyway, as you see, we, consolidated here, and let me show you that, low, higher low, and then we went. See the W right there? And then, here we go. So what I'm getting at is that we will come back in here. It's matter of fact, I'm probably more bearish right now than bullish near term anyway. And the reason being is that we're, getting far and away from the 20. We haven't touched it in a while in time and distance. And as you can see, before well, I don't have time really on this video here because I know you guys want us to get through it real quick. But anyway, as you'll go back in time, I mean, since look at the Nasdaq, look at the S&P 500, look at any of those market, the S&P 500, the Dow is what I'm getting at. Look at any of those, and normally they'll come back and hit that 20 after they bottom, consolidated, and taken off, hit it at least three times before, and you put a trend line there too, before they start breaking down. Sometimes it's many more times than that, but we're just looking at the most recent on the Nasdaq that we're doing the comparison to here. And as you can see, last time we hit the say we start this trend line here in this up price channel, and we haven't come back and touched the 20 or this uptrend line. Now, the only thing after a period of time, and no telling how high we could literally go, in spite of everything that's going on in the economy. That's again another video for another time. The only thing that would break this near term would be a black swan event, anomaly, another, pandemic, possibly World War III, whatever those guys behind the curtain are planning. That's the only thing that could keep us from uh, breaking this, okay, without touching at least two more times on the way up, okay, then we could see that, okay. And then let's go back over to Gareth real quick.
If that kind of correction. So if you move all the way down here, all right, so basically you'll erase half to 2/3 of the gains in the Nasdaq, which by the way would not be unusual. Where is Bitcoin going to go? And I would guarantee, almost guarantee, there's nothing that's a guarantee, you're likely headed back to 15,700. Now let's take it a step further. Imagine if the Nasdaq goes even lower, right? So what if the Nasdaq takes out the October lows? Do you think that
Okay, so here we go. Right in here is what he's talking about. Yeah, that would be a black swan event, okay? Because also, they talk about cycles. They need to, revisit that chapter in their book on the cycles. And there's only two guarantees. Well, there's a few guarantees in the market that are 100% guarantee. They happen all the time. Well, each time that they occur, obviously, this happens that I'm getting ready to share with you. Anyway, the 20 and the 200 always separate far and away. Either the 20 follows the 2, and this is the same thing on a 2-minute chart all the way up to a monthly chart. Okay, same thing, same thing. The 200 comes down to the 20 comes down into the 200, and if price continues to the downside, obviously, since it's a lagging indicator, the 20 will follow the price action far and away down under the 200. Or in this case, we're going to go far, away from the 200 to the upside. Each time we come in, that's exactly what has occurred. And as we look back, it's been a while since the 20 got close to the 200s back in, 2010 actually. And see over here, where to go? Yeah, we actually, 2007, 2008 had the collapse, uh, got under here, kind of double bottom to, lower lows here, pivots, and then we started working our way back up and over the 20s, so on and so forth. Okay, so let's go back and take a quick look here.
Bitcoin's only going to go back to those lows. Panic will set in. Humans are made to be emotional, and likely you're headed a lot lower on Bitcoin.
Okay, all right, so let's look at Bitcoin because again, we're going to look at cycles. This is going to blow you away. Okay. All right, first of all, let's just go like this. And what we see here, I don't know, just wanted to point out the halvings and then something that's pretty cool about Bitcoin. And number one, each one of these blue arrows point to a halving, okay? Now, as you see, Bitcoin runs up, pulls back, runs up into the halving, and then once it goes past that previous all-time high, as of yet, it never has come back and retested it. Okay. So we run up, here we go, pull back after an all-time high. We pull back, run, consolidate, more importantly, run up to the halving, and then we go parabolic, pull back, consolidate. This was the big COVID slam down here. Then we went parabolic, and then here we are. So even with this pullback into November here, which is the low, I'll still say that's our consolidated low, and we should not ever see that again because in previous cycles we have never seen the previous all-time high taken out. Okay, so let me show you this chart to break it down a little bit more. Here we go, consolidation, halving, parabolic, and then an all-time high. Pull back, consolidation, run up to the halving, uh, all-time new, parabolic, all-time high, pull back, consolidate. Here we are with most recently with this halving in 2020, parabolic. Of course, we pulled back and came close to the previous all-time high, trading under it. Talk about the pivot here, the close, actual close of the monthly candle. And then what we do is at 400, you can check this out yourself, approximately 470 days uh, from the next halving. Okay, right now it's going to be in April of 2024. You go back 470 days. This is a monthly chart, so it's a little bit off. It's 486, but close enough. Okay, 16. I mean, are we going to argue over 16 days or so? Okay, but anyway, I know you bottom, you consolidate, you run up into the halving, and then you go parabolic. Okay, and we're predicting this next parabolic run to go through probably the first quarter for sure, possibly the first half of 2025. Okay, so this is very serious. This is the accumulation phase that we're in right now. So, enjoy it while we have it. Okay. So what I'm getting at, he's talking about the correlation with the Nasdaq. I don't think that Nasdaq has anything to do. I think we're decoupled from the Nasdaq. And if we were with the Nasdaq, we'd already be, if we were trading with it, we would already be, wouldn't we? Up here pretty close to our previous, highs that we had put in. So just kind of recap, this is all about cycles every 4 years. So far has been absolute perfection, and we expect it to continue to be like that. Okay. And the only thing, only disclaimer that we have is that, a black swan event, they pop off World War III because of the economy, or there's another pandemic. You can, make up your own conspiracy theory. But guys, really, I appreciate you watching, appreciate you taking this material under serious consideration, and we will see you on the charts.